Right, Neeraj, thanks so much for having me. Bank of Baroda numbers came about 5-7 minutes back. While the numbers on the face of it have beaten Bloomberg estimates, not a very strong set of numbers if you see on a year-on-year basis. For instance, if we take the net profit is at 4,886 crore rupees, just about 2% up on a year-on-year basis, while it has beat the Bloomberg estimate, but not a very strong set of number. Core income or the net interest income once again up to about 11,792 crore rupees, just about 2% on a year-on-year basis. Asset quality definitely has improved. The gross NPA ratio is at 2.9%. Net NPA ratio again at 0.68%. Couple of basis point down as compared to the previous quarter. So asset quality showing an improving trend. That's exactly what the management has also guided us in the previous quarter press earnings, that yes, the asset quality would consistently improve. But what we are observing so far is that while the net profit is up, the operating expenses or the OPEX is something that is weighed down on the net profit. That's the first assessment of the numbers that we are getting, because we are seeing that the rise in total OPEX is about 14% on a year-on-year basis. And of this, if we see the breakup in terms of employee cost and other OPEX, the employee costs have been up the maximum, that is 20% year-on-year. We'll wait for a clarification from the management definitely on that front. But for now, the numbers look stable, but not really beat in terms of the street estimates. One point, Neeraj, I would really like to point out is that about 2 or 3 days back, RBI also lifted the curbs from Bank of Baroda's mobile application. So basically in October, RBI had placed curbs on BOB World App's mobile application, and the customer onboarding was stopped. So while we were looking forward to the management's commentary on that in this quarter, now we know that the curbs have already been lifted. So that will also be interesting to watch out for as to how the management plans to recover its customer onboarding and the numbers once the curbs are off. Back to you.
Okay, thank you for that, Pragati. So Bank of Baroda has not been received very well. A slight uptick after the curbs were lifted, but it's not really helped overall. Siddharth Khemka, I just wanted to get your view, not just on a Bank of Baroda, but we've seen State Bank of India, Punjab National Bank. You know, your PSU banks have been the darlings of the street. Do you think the quarterly numbers have justified that prime position?
So, Kamana, I think if you look at some of the other numbers as well, maybe if you also include Can Bank in the list, there has been definitely a dismal number that has come in, especially on the front of the slippages and the provisions. Luckily, SBI, which is the largest, had lower provisions compared to expectations, and hence I would say that clearly among the lot was much better numbers compared to PNB, Can Bank, now Bank of Baroda. So we have seen a lot of re-rating that has happened, and a lot of improvement in the quality of earnings for the PSU banks over the last 1.5 to 2 years, and that has led to the re-rating. So there could be 1 or 2 quarters of blip, but I believe with the economic growth and the focus of these banks to improve the operational performance, the overall view on PSU banks continues to remain positive. And again, I said there could be 1 or 2 quarters of blip in the reporting, but overall view is positive. We prefer SBI, which is the largest of the one. Very strong numbers they reported. The outlook is decent and positive. And even internally, we were discussing in the morning meeting why SBI cannot trade at a valuation which an Axis bank does. Definitely ICICI and HDFCs of the world trade at a very high premium, but an Axis at 2 times and SBI at 1.5 times, given similar growth and similar return profile, the discount is no longer warranted, is what we believe. And we believe over the next 2-3 years, with the improvement and consistent delivery in growth, and SBI could also command such kind of valuations going forward.